Beatrice, a very good morning to you. So it's the big day after the big budgets that we saw being introduced in Kenya, in Tanzania, and Uganda, as well as Rwanda. But of course, in addition to that, we turn our attention to equities again.
Good morning, Godfrey. One of the things that we are now seeing coming in this morning is a pre-tax loss by Kenya Airways of 7.8 billion, which, as I was chatting with my market watcher, says that it was above, it was more than it was expected. So that is some of the details that you're going to be looking at. But before then, let's have a look at the currency, whereby we saw the Kenyan shilling closing at 85.35.55 to the dollar, barely changed from Wednesday's close of 85.35.45. But traders say that the soaring deficit of 7.9% of GDP in the fiscal year 2013-2014 announced yesterday could push lending rates higher and strengthen the shilling, but at the expense of the economy. Crossing over to the main share index, we saw the Nairobi Securities Exchange main share index falling 0.5 percentage point to 4,838.01 points, and the index has dropped 3% in the last 5 trading sessions. And traders say that this was on the back of investors who are booking profits. With us in studio, we have Eric Musao. He's a research analyst with Standard Investment Bank, and he'll help us unpack some of these numbers. So you are telling me that you're a bit surprised with the net loss that you're seeing from Kenya Airways. Did you expect it to be slightly better or worse than this?
Yeah, the numbers came in slightly lower than what we thought. They had indicated that the second half had improved, and true it had, but the scale of the loss was slightly bigger than we thought. But nevertheless, they've offered generally upbeat guidance on 2013-2014 numbers, and we hope they can sort of leave this year behind and sort of improve going forward. Given
the issue of the Eurozone crisis, which has not yet improved in any way, and it's one of the key reasons that they actually attributed to their loss, do you see them turning around anytime soon?
Yeah, what they've been trying to do is actually to cut back capacity to Europe, and then building up more capacity within Africa and Asia and the Middle East. So that strategy appears to be working to a certain extent. Obviously, the cost element did come through, but I think longer term, this is a natural strategy for them to take.
Mm-hmm. Looking at how investors are likely to take these numbers, how do you see them perceiving this number, especially how they're likely to trade on this stock?
I mean, it's really difficult to tell. I mean, we've really had a lot of bad news from this company. They've announced a number of initiatives. They're looking at setting up their own oil procurement company, also getting into the hotel business to sort of work around the cost element. I'm not sure whether this will sort of mitigate the overall impact of the negative news.
Mm-hmm, mm-hmm. And looking at the strategy now that they're trying to implement intra-Africa routes and Far East, do you see it helping, tame the losses that they're seeing from Europe?
Yeah, you can see it in the numbers that, within Africa, they are doing well. Obviously, Africa has lots of challenges. Every year you're having quite a number of elections, you're having, security challenges across a number of destinations. And these are all issues that they have to grapple with. You have the issue of double taxation treaties as well, because Kenya hasn't signed with as many countries double taxation treaties. So that affects Kenya Airways. But net, I think, it's still an important continent to sort of look at.
Mm-hmm. Now let's cross over to some of the news that we saw coming in yesterday from the budget, and capital gains tax was reintroduced. Do you see this affecting some of the stocks that are listed in the stock market, and also the environment in terms of looking at it from investor participation in the country? Does it sway them away?
So they actually say that they are going to reintroduce capital gains tax. So the issue is that we don't know whether it will apply for both securities and land, essentially properties, or whether it's going to just apply to properties. So that was one of the main challenges, and that wasn't clarified. So we're going to have a bill which is going to come. So at the moment, it looks that things are still okay. And even if it applies to securities, what would be the cutoff date, how would it be applied, and so forth. But I think it's now almost for certain that we're going to have capital gains on properties.
What's the impact that you see on real estate, which is one of the very booming asset classes? Does this then now, put a hold or brakes to this sector?
Depends on how the tax is structured. I think primarily it will be targeted at speculators, essentially people holding properties within a short period. you wouldn't want to hurt the issue of home ownership. So to a large extent, what you do is probably to try and ensure that the capital gains tax applies more to people who actually sell assets maybe within a certain period. But if it's long-term home ownership, then it doesn't apply in that particular case. So I'm sure they'll try to balance out such cases in order to sustain the property sector.
Something else that also came out of the speech was the issue of bank assurance. Now multinationals can be able to do that. For you, do you see this affecting the results of banks? The fact that they can now be able to sell insurance?
Not significantly. I think we still have a lot of room in this sector for having bank assurance. It's been happening, but probably not to the scale that it can be. You have a lot of room in terms of increasing penetration, and having this combination of these two products essentially could actually spur more penetration and increased usage. So at the end of the day, probably the more players you have in this sector, probably players who are much more informed would be better for this market.
So the insurance companies are likely to benefit more from bank assurance than the banks would?
It's probably, I think both players would benefit because the banks would get a commission, and obviously insurance companies would get better distribution because then they don't usually have as large branch network or a foothold across the country.
All right. Looking still staying on the track of insurance, we saw the minister yesterday saying that he is going to remove premiums on group life insurance, and also exempt it from taxation. For you, what are the sentiments that you're reading from this? If you look at some of the listed companies that like Pan-African Insurance, like Jubilee Insurance, how do they benefit from this?
I mean, all these initiatives are just to encourage essentially companies to take more premiums and essentially just to encourage the growth of the insurance sector, because this has been an area which has fallen far behind. As the banking sector has grown, the insurance sector has sort of fallen behind. And even though we've seen a bit of recovery in the last few years, still the premium growth has not been as strong. So I think what the minister was trying to do is to try and encourage growth of this sector. I think that's a welcome move.
Mm-hmm. What are some of the stocks that you're likely to pick for next week?
I think, especially from the budget reading, you had East African breweries. They had the tax duty remission actually reduced from 100% to 50%. So that's going to affect the Senator keg volumes of pricing, and essentially that's the net effect. That is actually a tax increase. The other one is actually Longhorn, where the government is investing significantly on e-learning and e-teaching methods, and essentially that means that the publishing business has to really rethink the way they do business, and so for them, I think they'll have to look at how they can set up digital content.